Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, April 4th, and happy Friday to you all. Hope you guys have great plans for this coming weekend, especially Final Four. So this should be kind of fun to watch. Couple economic news releases today, big ones. This is the big one for the week, actually. We had the non-farm payrolls for the month of March. So we had 175,000 reported last month or back in February, and the forecast for this month is 200,000. It came up a little short at 192, but even though the forecast didn't meet didn't meet the forecast, the previous 2 months, back in January and February actually went up a little bit. So the winter months weren't as weak as we initially thought. So people are a little disappointed, but yet again, they weren't as disappointed after they found out that January and February's numbers were actually raised a little bit. So people are kind of still kind of thinking about it. So there's a little optimism there. Last but not least, we got the unemployment rate. So we had a 6.7%. We had about 6.6, and it came in at the same 6.7. We got headline news here. Stock market actually started up the morning high because they had a little optimism with the with the jobs numbers, because they felt like it was good but not great, steady. And that, as the morning kind of winding down, later in the morning, the stock market actually went the opposite direction. So that optimism was kind of going away. But next week, be prepared. We do got the Fed minutes next week. So the FOMC meeting that we had previously, those minutes will be released next week. So give us a more insight as to what was being said, what was discussed at their meeting with that. So let's go ahead and take a look at how the bond market is. So remember, I said when we were having a that one whatchamacallit, that opening gap would close, and it did. So even yesterday, we had closed that gap. So we touched the upper part and pulled back a little bit. So that gap was closed. But today we open up another huge opening gap, but for this time to the positive. So we got a nice little rally here, about 44 basis points. So a nice rally here, which is translated to much improvement in the interest rates, almost a half a point difference. So great numbers there. Now, if you're short term, I would definitely lock in, as this gap at some point will definitely close up, because it's not healthy to be able to sustain a opening gap like this and continue going upwards without it coming back to close that gap. So short term, I would highly recommend locking in rates today if you can. But today so far, very nice numbers what we're seeing here. All right, folks. Again, next week, kind of a light news week, but we do got the FOMC meeting notes will be released, and that will definitely could rattle markets if there's any surprises in there. Have a great weekend, and thanks for watching. I'll see you guys next week.